Well, hello and good morning. Today is Monday, April 3rd. It is the start of the second quarter in 2023. Good morning. I am Kenny Polcari, your host of the party, and this is what you need to know. Well, the quarter ended on a high note, and the Dow actually ended the quarter positive, which was a question on Friday whether or not it was going to be able to pull it out. Over the weekend, OPEC Plus cuts production. Why is anybody surprised? This morning, WTI is up 5.5%, and big oil is following suit. Remember, this week is a holiday shortened week. Markets closed for Good Friday. There's lots of economic data out this week. And what are we having for dinner? Well, I'm going to give you the butterflied leg of lamb so you can get ready for the Easter holiday. Okay, so wow. What an ending to the quarter. Stocks surged going into the final bell of the first quarter 2023, and it was beautiful. Recall that I said on Friday that all the indexes were in positive territory other than the Dow, and that it needed to rise by 245 points just in order to bring it flat on the year. Well, guess what? The Dow rose by 415 points or 1.25%, taking it up 0.4% year to date. The S&P rose 58 points or 1.45%, up 7%. The NASDAQ is up 208 points or up 1.75%, taking it up 16.8% year to date. The Russell added 35 points or nearly 2%, taking that up 2.35% year to date. And the transport rose 310 points, taking that up 7.8% year to date. An amazing performance considering everything that happened over the last 3 months, between rising rates, conflicting commentary between street analysts, big name investors, and the Fed, a shrinking and then exploding Fed balance sheet, the ongoing war in Ukraine, the implosion of 3 U.S. banks, Silicon Valley, Signature, and Silvergate, the rush to protect all depositors at all U.S. banks, up to infinity, said Janet, and then pushback, said Janet, and then the reiteration all over again, said Janet, and that caused all kinds of confusion and anxiety. Forecasts of both a soft landing and a long, hard one remain top of mind, along with the coming recession, forecasts of doom and gloom, the rush of investor money into the treasury markets that is now offering 4.8% yields on short duration money. Think 3 and 6 month bills, right? Bank CDs that are now in the 5% range if you want to tie your money up for 12 months. An erratic and emotional commodity market that saw oil trade in a $22 range as low as 63 to a high of 85, while gold ended the quarter up 9% at 1986 an ounce. And finally, we saw both Bitcoin and Ethereum rally nicely, up 71% and 50% respectively. I mean, shall I even go on? Economic data remains somewhat confused. Inflation is making slow and steady progress lower in some parts of the economy, while remaining stubborn in other parts of the economy. In fact, the very parts that everyday Americans feel it the most: food, energy, utilities, and healthcare. The latest inflation report, the PCE, which is the Fed's favorite data point, inflation data point, did show improvement month over month and year over year. And that is part of the story that helped send stocks higher on Friday. The Fed has continued, though, to remain steadfast in their commitment to kill inflation at what appears to be any cost. Expectations for a May rate increase remain above 50%, and investors in the markets appear to be okay with that. And so, it is what it is. At the end of the quarter, we saw anything tech at the top of the leaderboard. The XLK up 21% for the quarter. SOX, which are the semis, up 28%. Bots, artificial intelligence, up 25%. CIBR, cybersecurity, up 10.5%. ARC, disruptive tech, up 29%. And some of the big names up even more. NVIDIA up 90% for the quarter. Apple up 26%. Amazon up 23%. C3 AI up 200%. CrowdStrike up 30%. I mean, I can go on. Behind that, we have communications. The XLC was up 21%, consumer discretionary XLY up 15.7%, and then the performance dropped significantly. Basic materials up 3.8%, industrials up 3%, real estate up 1.2%, and then we go negative. Financials down 6%, energy was down 5%, healthcare down 4%, and utilities down 4%. Now, if you drill down, you see even more of a mixed bag. The super regional banks, KRE, down 24%, and that should surprise nobody. Housing, no, XHB was up 12%. Airlines, the Jets ETF up 9%. Metals and miners up 6.7%. Aerospace and defense up 3%. Energy exploration and production down 5%. And the Invesco Dynamic Building and Construction ETF, the PKB, was up 12%, while the First Trust RBA American Industrial Renaissance ETF gained 9%. Economic data this week includes the S&P Manufacturing PMI of 49.3 and ISM Manufacturing of 47.5, both in contractionary territory. Factory orders expected to be down 0.5. Transport's expected to be flat. The JOLTS job opening of 10.5 million jobs. That is down from last month. Durable goods of negative 1%. ADP employment going to show 210,000 new jobs. S&P services PMI of 53.8, while ISM services of 54.3, both in expansionary territory. And then on Friday, when the markets are closed for Good Friday, the government will announce the NFP report, and that is expected to show an increase of 223,000 new jobs. Unemployment to remain steady at 3.6. Average hourly earnings month over month up 0.3, which is up over last month, and year over year up 4.3%, which is down over last month. Consumer credit goes to $19 billion, up from $14.8. So now it is the start of a new quarter. Report cards for the first quarter are already in the mail. Earnings season begins in earnest next week, officially on the 14th. With the release of the banks, right? Kicked by Dow member J.P. Morgan, followed by Goldman, Citi, Wells Fargo, Morgan Stanley, Bank of America, and the list goes on. Beginning this week, though, we have all kinds of investor days sponsored by all the big investment banks and Third Bridge, where research is supposedly reimagined. This week, we're going to hear from FRBK, which is called Republic First Bancorp on the 6th. This is not First Republic Bank, which is FRC, which announces on the 13th. So don't get them mixed up. Okay, next up, oil. Oh boy, if anyone says they're surprised, you obviously have not been listening to my morning blog. I have been telling you for weeks now that the Saudis and OPEC Plus were not happy as the price of oil, plunged sub 80. I said over and over that they have $80 as their minimum price target for oil, but they would love to actually see it go in the 90s. Last month, we saw oil struggle to stay in the 70s until it couldn't, falling to the low 60s before it found any stability. Last week, we saw oil rise on the rumors that the Crown Prince, MBS, is not happy. And then, over the weekend, OPEC Plus, led by the Saudis, made a surprise announcement, right? They made a surprise that they're cutting production by 1.5 million barrels per day, abandoning all assurances that they would hold production steady. OPEC Plus and the Saudis clearly want to see oil prices higher. Duh, of course they do. Just a quick question though. How much oil did Joey buy to refill the SPR when we saw the price decline to $63 a barrel 2 weeks ago? Answer, zero. And this morning, WTI is up 5.5% or $4.15 a barrel to $79.84 after trading up to $81.69 overnight, fulfilling my bet that we would see 80 before 60 as the price of oil was in decline last month. Street analysts now telling us that $100 a barrel is just around the corner. This morning, Exxon is up $4, Chevron up $5, Conoco up $3, Valero up $5, Halliburton up $4, and the XLE is quoted up $4. U.S. futures are confused. Dow's up 103, the S&P's down 5, the Nasdaq's down 85, and the Russell's down 5. Now again, this should not surprise anyone. After the performance we saw last week, it is no surprise that at the beginning of a new quarter, we see some initial profit taking. On top of that, Morgan Stanley's Mikey Wilson's at it again. He had to say that tech has gotten way ahead of itself, so expect to see some profit taking in tech. Remember, Mikey is also the one calling for a significant pullback in the S&P. Think S&P 3000 are down 27% from Friday's close. Whatever. And now that oil is headed towards 100, expect inflation to remain stubborn, and that will change the narrative out of the Fed. As of this morning, Fed fund futures are now pricing in a 65% chance of a 25 basis point rate hike. Remember last week, it was 55%. European markets this morning are mostly higher. The UK up 0.7, while Spain is down 0.2. Everyone else is somewhere in between. Oil and gas stocks leading the way up. They're up about 3%, and that's causing travel and leisure stocks to decline. thinks because it's going to be more expensive, right? Energy will be more expensive. It's going to raise prices for travel and gas. Banks are moving up, even as UPS gives up 2% on these job cut rumors as part of their Credit Suisse takeover. Gold is down $2 at $19.84 an ounce and will most likely test $19.50. And why? Because with the latest news out of OPEC Plus, the concern is that inflation is going to remain strong and that's going to force the dollar higher, which will put some pressure on the commodity complex, right? It's consolidating now between 1950 and 2000, with 2000 proving to be a difficult level to pierce. The question now is, will 1950 be support? And bonds, they continue to be confused as well. Prices are up and they're down and they're up and they're down. And this morning they are down, and that's sending yields up. The 2-year yielding 4.07 up from 4.02 on Friday, while the 10-year's yielding 3.5% up from 3.47 on Friday. Short duration 3-month and 6-month bills are right in there at 4.8 and 4.9%. respectively. The S&P closed at 4109, up 58 points. And while the momentum is on our side, it is not going to be a surprise to see the S&P pull back a bit and consolidate above and maybe test the 50-day moving average trend line at 4,020. Today's eco data, which is manufacturing PMIs, will set the tone. Remember, the next 2 weeks are vacation weeks between Passover and Easter. Lots of people away from their desks on vacation. It's also a shortened holiday trading week, with the NFP report being released on Friday when the markets are closed. My sense is that we remain in the 4,020, 4,200 trading range. Wow, look at that. The same numbers, just in a different order, right? 4,020, 4,200. Come on, help me out here. Okay. What do we have for dinner? The butterflied leg of lamb, which is an Easter favorite, right? It's a holiday classic. For this dish, you need one butterflied leg of lamb. You need sea salt, pepper. You have to make a marinade. For that, you're going to need red wine, balsamic vinegar, Worcestershire sauce, garlic, shallots, oregano, and rosemary. Now make the marinade first. So mix 1 cup of red wine, a half a cup of balsamic, about 1 tablespoon of Worcestershire sauce, 4 smashed chopped garlic cloves, 1 minced shallot, oregano, and then some fresh rosemary. Now, the rosemary is up to you. You can put in as much as you like, more or less, your call. I'm not big on rosemary, so I tend to put less, but you do you. Now, marinate the lamb overnight in the marinade you just made. Now, the next day, when you're ready to cook it, remove it from the fridge about 2 hours ahead of time and let it warm up to room temperature, right? Leave it in the marinade, just let it warm up to room temperature. Now, preheat the oven to 475 degrees. Take the lamb out of the marinade and place it in a slightly oiled roasting pan. Season it with salt and pepper, put it in the oven, and roast it for 10 minutes at 475 degrees. Pull it out, flip it over, season the other side with sea salt and pepper, roast it in the oven again for 10 more minutes. Now, take it out, add just a little bit of the marinade, reduce the heat to 325 degrees, and cook it for an additional 30 minutes or until the meat thermometer reads 160 degrees. Remove, cover it with tin foil, and let it rest for 10 minutes. Slice thinly. Now you want to slice it on a diagonal, always against the grain. Arrange it on a serving platter that you've adorned with fresh kale, right? Because remember, it's all in the presentation. The meal must be pleasing to the eye as well as the palate. Now, serve with the pan juices on the side. You can accompany this meal with roasted red potatoes, either steamed asparagus with hollandaise sauce, or maybe French cut green beans that you sauteed in onion and tomato sauce, and maybe some wild grain rice. Always have a large mixed salad with feta cheese, salt and pepper, oregano, salt and pepper, oregano, dressed in lemon juice, olive oil, and toss it well and serve it. It's delish. Always, you can have this meal with a nice barola, right? Because it works really well with this dish. In any event, look, it was a beautiful weekend in Florida. I did get some sun. I hung out by the beach a little bit yesterday. Love the ocean. The sun looks like it's coming out now today. It's going to be another gorgeous day here in South Florida. But until tomorrow, take good care.